Hi there traders, and welcome back to Elite Trade Skills and part 2 of our price action video series. So how do you define support and resistance? So in part 2 we'll be showing you exactly how we define it and the key aspects that we're looking for. So stick around, grab yourself a coffee, and we'll see you on the flip side.
First thing we want to do is explain how we define it and what we're looking for, the key aspects to define a resistance zone and the key aspects to define support zones. Right, so if we go and start to look at, say we're defining a resistance zone first. Now it's just going to be the reverse for support, okay? So we've got an uptrend, it's in play, the market's pressing higher, all right? And what we're looking at is the anchor to the uptrend. So we've got an anchor here, anchor, anchor, and the latest anchor, we're looking for that to come under pressure. So we want to see sellers come in and break the anchor to the uptrend. So once they've broken the anchor, what that's meaning is that that trend up is run out of steam. So buyers are run out of steam. They're no longer continuing to press price higher, and sellers are starting to come into the action and starting to push price down. Okay, so that's the first key aspect. Now we just go and draw our zone through here. So this is the area, the latest high. This is the area we're looking to potentially define as resistance. All right, so we've broken the anchor, and we're looking to see what happens when price gets back up there or potentially fails slightly below, but within plus or minus 5%. So you can get the market press through and then fail. Okay, so it just takes out some stops and then comes back into the or below that zone. Or it could fall slightly short where buyers couldn't quite test the exact high. They might be within a few points. So either way, that's the zone we're looking for to find some selling pressure come back into the action. And that's where we're looking to potentially take a short on the short side, where we're expecting all the buyers that are built up to turn around and get squeezed back out of the market and the market to head down. Okay, so if we continue to draw up that, we might find that buyers start to step back in and they pressure price back up. All right, so from here, two things can happen. All right, we might find that, we draw the two, we might find that price just pulls back, it gets up to the high, you get a few sellers come in, pulls back, but it holds a higher level, and then we get market come straight up and through the resistance zone. Or what we're looking for ultimately to define that resistance. So if this happens, it's not really a resistance zone at all. It's just a high. It was tested. It held for a little bit, and then buyers step back in. So buyers were still well and truly in control there, and we don't determine that as a resistance zone. Okay, but what happens if price actually backs off? It comes to retest and it fails again at a lower level, and that's where you start to get the sellers come in and pressuring price lower, and that's ideally what we want to see. Okay, so we want to see the price push up, pull back, take out the anchor, and when it goes to retest again, we want to see it fail and build a lower high as opposed to holding some minor higher levels and pressing straight back up and through. Okay, so once you get the lower high start coming to play, and you might break down through the minor low, okay, that there is confirmation that that's a resistance zone, and that's where we want to get short. Okay, so that's ideally what we're looking for, is to get short on a lower high. We term it a shoulder trade, and the same on the upside for a buy entry. Okay, so if you flip this over and we're coming down into support, or we're coming down into a level, and then we break up through the anchor to the trend, which is here, and then we start to come down, and we might fail again, retest it, and then we start holding higher levels. That's ideally what we're looking for. All right, so that's your level there, that's your zone, started to hold, and we might just buy it through here, the break to the high, off a higher low, and we're looking for that. Any sellers that come in to get pressured back out of the market. So the sellers are the fuel. Once it fails for a second time, and we determine that support zone or the resistance zone, the sellers, all the buyers in this case, are what's going to be the fuel for our entry and our continuation, either higher or lower. Okay. So if we go and now we just go and look at the chart and we try to determine some support zones and resistance zones. All right, so if we'll start here. Let me just clean up that chart. Okay, so if we just start in this zone here, we've got a leg up. So we've got little minor anchor levels. They're holding the trend up. Okay, and you might have a minor one here. And you can see at this stage, you got a minor anchor level. I wouldn't really term that as an anchor. It's just more choppy price action, I'd say. The market's come back down, hold a lower level, and we push through that anchor. So at that stage, this is the high that we're looking at to see if that can hold. All right, so if we go across, we've broken the anchor, we've gone back up to retest. As we mentioned, the market can push through and pull back again. All right, so that's fine. All right, as long as it fails and finishes below, and then we get our lower high, which we did get essentially here. So it's pressed up, pulled, a lower high, come in. The entry could have been through the low. You stop above. Now it did retest that lower high. It didn't get tagged your stop if you had your stop a few points or 5 points above that lower high, and it's continued on down. Now, obviously, the market's turned around and headed back up again. So what we've got in the reverse situation is market's pushed up, corrected lower, taken out the anchor. So that trend up, that minor little leg up has changed. We've gone from buying pressure to selling pressure, came back up, failed. It's come back down, and that's the most recent higher low, or the key low, that we'll be looking for on a reversal. So we might be looking at this if we want to get long, thinking, okay, we've got the price pressuring down. What's going to happen at this key low? All right, it did wash out a bit, and we turn around and pop back up again. So that's fine. We had no high low really to work off. You could argue that that's a minor pullback. You could buy the break of that minor pullback, and with your stop just below that level, that did work out. But that, for me, technically, it wasn't really deep enough. So I wouldn't have been looking to go long just there. Potentially, you could have gone a bit further up, but then you're running into the same resistance zone as we defined before. Okay, so one thing I want you to just take note of is the entry criteria, what we particularly look for. So we've mentioned shoulders before, I think, in the first video series, and we're going to discuss it further with regards to price action and the way to enter off your shoulder trades and why we're looking for shoulders. But the reason why we do enter off shoulders, say, for example, this on the downside, we might have entered short here. And even though it didn't really play out too well, that was a criteria for getting short. And the reason behind that is so that we're not getting caught in the chop around a resistance zone. So at the stage when prices actually, say here, for example, prices pushing up into that, we've defined it as a resistance zone. We don't know at any one time when the price is come into a resistance zone, or it's come into a level which you think is resistance, or the same for support. It's a 50-50 game, okay? Even if it's touched it a couple of times, I would still term that as 50-50 chance of being right and wrong, okay? Even if you said it's hit it 3 or 4 times before, it should be high probability that it's going to hold again. No, I don't see it that way. I see it could be the exact opposite, the high probability that it's going to break, because a lot of resistance is going to be set there. There's going to be a lot of stops that could get triggered. And for me, that's a prime entry long. Okay, so the reason why I'm looking for a shoulder there is because if it goes through and pulls back, you know that there's selling coming in. Like at this stage, we know that there's selling coming in. The market's not ready to break there, or it's ready to sell off quite hard. Okay, but either way, we have got confirmation off a lower high that sellers are stepping in. They are holding pressure down, and the buyers are either going to take their foot off the gas, or if they have run out of steam, there's not really going to be any buyers to soak up any of that selling pressure. All right. But if you did it at this stage, if you traded that differently and you didn't wait for the shoulder trade to come out, and your style is to just put an offer, or you go on the offer just below, or a limit order just below that resistance zone that we've defined, then for me, it's not a high probability setup, and it could be fraught with danger. So you've got your stop just above. You might have a 20-point stop each time, and you're just selling every time it gets up to a potential resistance zone. At this stage, this first time here, you haven't defined that as resistance. You might have sold it when it got there. You might have got tagged if you had your stop too tight here, and then it's come down. So you got the idea right, but you got stopped out. Okay, the second time it come up, you go, I'll give it a wider stop because I don't want to get tagged again. And that's hit at 1, 2. It's going to come back a third time. But instead, it's pierced straight through this time, and it stopped you out again for a second time. So you're 2 from 2, trying to get short twice, and you're stopped out twice. Okay, but if you're working off the shoulder, you have got confirmed weaknesses starting to come into the market. Whether there's follow through on that weakness or not is a different story. But you have got the confirmed weakness that's coming in. At this stage, there's no confirmed weakness whatsoever, and the market just pierced straight through. You got entered long on you entered short on a limit order. Your stops above, you got stopped straight back out, and you weren't in profit at any one stage at all. It just went straight through your entry order and straight through your exit order. Okay, so that's the reasoning behind why we're looking for shoulders, and it's the same on the long side. Okay, so if we continue on across to the right, what we're doing now is, we're just going to go through the same process. So we've got a leg up here. We've got through that resistance zone. So that's no longer active. You've got the pullback to test. You might go long in here, for example. But either way, you've got the anchor, market presses up, pullback, anchor, the trend up. You've got the press higher, pullback. Just retest that minor high, retest the minor low. So I'd turn that as an anchor as well. You've got the pressure that is pushed up. and then it started to fail from there. So you got a little minor double level there, which we could have just done that, come back down and retest, held this level and gone back up again. Instead, there's further weakness to come in, okay? So we've got here, the market's pressed down, come into, I mean, if you're looking at this, for example, you weren't waiting for any sort of anchor to break. The trend up is still intact. At this stage, even if it retests that level, that anchor's in play. The market is still heading higher. That trend up from way down here to around 54.84 is still in play. The trend up is still in play. What you'd need to see off here is a higher low to play out. And if the high low plays out, that means that anchor's still in play and we want to go long. But instead, it's gone straight through and we know it's broken the anchor. So we know this is the important high that we're starting to look at for a resistance zone, or to define our resistance zone where we might want to get short. So if you go right across to the right, you can see that price started chopping around in this level, consolidated, and then took off and went straight through, pulled back, held high levels. So really, we don't define that, or I would not define that as a resistance zone just because it was a previous high, because it's gone straight through. So by the terms of our criteria for defining support and resistance, that doesn't match up, right? So if we keep going across to the right, we'll see if we get any more coming to play. So this is a well-established trend up. We've got trend up, pullback, another leg up, goes all the way up to here. Okay, so we start looking at this area. We know we've got an anchor level here. It was a bit of congestion. We pressed higher. Got an anchor level coming to play here. I wouldn't really look at, you can say this is an inside anchor level. You might say this is your anchor level to that trend up. So we've still got higher low, higher low, higher low. And I would actually define that as an anchor level because you've got the market pressed up, pull back, retested. If it retests that high and fails, that's your latest anchor. The market's gone down, pushed through the anchor. It's gone back up to retest the previous highs here and start to fail. So what we're looking for, this is our resistance zone. We've now met our criteria. It's matched off quite well. And we're looking for a lower high for an entry short. And whether you've got your lower high in here, you might trade short off this trade. But either way, we know that there's quite a bit of fuel. And if we can go all the way back, there's quite a bit of fuel built up on the long side that is potentially ready to get squeezed out of the market and provide us with a shorting opportunity. Okay. So that there is another resistance zone that we've defined. If we go and look at this leg down now, so what we're potentially looking for is a buying opportunity. Or if you are short, you might start to do the same criteria, marking up your anchors to try to define when should I get out. Okay, if you're following your anchors down, your stops below here, your stops below here, you've eventually got stopped out. So if you got stopped out and your anchors are right, you might say, okay, this is the low that I'm going to be looking at now if I want to go long, or I want to see what happens. Does it go straight through or does it start to hold up? Right, so it's broken the anchor, so that's met our first criteria. That leg down is starting to fall or fail. Right, we've got our push up, it's held, and we've gone back to the retest. Now, this is slightly different to what we've seen before. It has gone straight through the level and bounced straight back again. So that's fine. Okay, it's pressed through the level, this low, it's taken out some stops. You'd be looking for from here, if you wanted to continue to get short, this has to hold and it has to continue down. Okay, but what we saw, it's come back in, retested that same zone and started to hold. So in essence, what you'd be looking for here, it matches the criteria. We've got a support zone come through. It's a big flush out of that support zone. It's popped back into above the support zone. It's come back and retested and held a higher level. So that's fine. All right. So the entry criteria, you can have a break of that little minor high, stop below the higher low, and you're going long. Okay. So it's met our criteria. We've got our support zone that's come in. We've defined our support zone, and we're just waiting for an entry setup after that. We're either waiting for potentially if you want to go short, if we haven't defined that yet, you might want to go short. It breaks down, pulls back, retest it from underneath, and you might go short with a move through, okay, with your stop just above the lower high, because you know that potentially that was a bit of a pause. We've got a longer term trend out that could be starting to play out. That's your first leg down, your first pullback, and we're looking for that continuation for a second leg down, and you've entered short off a lower high. That's fine. But instead, once it started to hold off a higher low just in here, that's defined that as a support zone. We're expecting that to hold up, and we're expecting some continuation higher. Okay, so if we just go and do the last little piece of the puzzle, or the last section, we've got a level up here. I mean, that's quite clear in hindsight, but if we look at the same scenario, we've got our prices pushed up, probably define that as your anchor there, or even once you've had this pullback, and you've retested that zone a little bit higher, and it's come back and retest the highs, that to me is the anchor. And you can see if you extrapolate that across, it's actually broken there. Maybe the same scenario as this. It's come back in and it's actually got a bit choppy from there. But what you can see if you keep going across, as long as that holds, that's our support zone. It's retested, it's held, retested, it's held. But we've got an opposing high. Okay, we're starting to get a resistance zone. Pull back, come back and retest there. And we've not really breaking an anchor. So this is more of congestion or sideways price action. But what you can see, you've got obviously sellers are coming in at this high. The market's pressed down. Sellers are trying to press it down. The buyers are still relatively strong. It's pushed back up, but sellers have come back in a slightly lower level, and they're holding a lower high now. And we've just held a lower high in here, and we just recently, as of Friday night, we've just broken through that support zone, the original support zone, and now we might be looking for the next level. Okay, so what happens at this low? Do we get, if we just delete this out, what happens at that low? Are we going to, the same criteria? We're going to hold that level, hold a higher low, and then potentially go long. And then what's going to happen at this resistance zone? Are we going to hold a lower high, or are we just going to keep chopping around like this for a while? Okay, that could be a scenario, or we might just go straight up and through if we take it from here. Whoop. That might be the scenario. Whoops, I'm just drawing those up. Be a little bit cleaner. We might pull back, hold a high low, and we just go straight through, and all the sellers that are built up here get squeezed out of the action with a move through, and they get stopped out. They have to buy back into the market, and we get their leg higher, continuation higher. Or is this going to be a key major lower high, and are we going to get a bit of a sell-off from here? We might go, just say we go through, we pull back, retest it, hold lower levels, and we get a big sell-off from there. Okay, so at the moment, we'll see how we go on Monday, but at the moment, this low in play is in play at the moment. We haven't proven either way whether it's going to hold, whether it's going to provide a support zone, or whether it's just going to blow straight through yet. We need some more price action. Don't forget, we're on the 30-minute chart, so we might get it quite quickly. But we're either looking for that to hold, bit of a pullback, and we might go long off that level if we can get a higher low, or if it pierces through, come back and retest, and then go short. Okay, so either way, that's an explanation of how we would define our support and resistance zones and what we're looking for. What are the key aspects to define those zones that we need to see before we trade either long or short?
Well, we hope you enjoyed that, traders, and thanks very much for listening. Remember, if you did like our video, please subscribe to our YouTube channel for more great content and sign up to the website to get access to all our premium videos for free. Speak to you again soon.